My name is Iyinoluwa Aboyeji, and I am general partner of the Fund for Africa's Future. I helped, before I founded the fund, I helped build two great companies, Andela and Flutterwave. I left all those companies with very buoyant bank accounts. I think at Andela, we had just raised 24 million when I left. And at Flutterwave, we had just raised 20 million when I left. So it was definitely nothing to do with finances. I think ultimately what it boiled down to for me was that my job was done. I'm someone who believes in divine assignment. The moment my job is done, I move on
Yes, sir.
and go to the next assignment that God gives me. So I think my job was done. The companies were in beautiful shape. I just felt like, spending every 3 years building another company wasn't an efficient use of my time. And I could probably try and build a couple in parallel while teaching, because I'm not getting any younger, teaching a new generation of investors how to build alongside founders. And so that's more or less the ethos of building a platform for investing in technology companies as opposed to doing it oneself. I mean, there's a real question of whether you could have done this in the US, if you ask me, right?
Okay.
Because that's a society without a lot of problems.
Okay.
It's very people, and quite frankly, a lot of the problems that I would be trying to solve or I'm passionate about solving have already been solved in some manner there.
Yes, sir.
They have a functional government. Yeah, so I think for me, I chose Africa because it remains the area of greatest promise when you look at the global economy. So I don't actually think the reverse. If I was American, I would still be making my way here because if you think about where you have the opportunity to over the next 20 to 50 years still play a huge role in shaping society and leadership in society and so on and so forth. I think you get the picture. I think at some point the local investor pool will have to wake up to the opportunity. Local investors who are helpful can really help you navigate and build relationships with the right people so that your business can scale and grow. That's why you would need local investors at all. And they also have a better understanding and context of the market,
Yes, sir.
at least earliest. So they should be able to guide you in how to execute for results, right? Which
Yes,
is
sir.
the most important thing. I think that what would happen as there's more validation and depth to the market is then everybody can get involved. The pension funds, investment banks, the merchant banks, they can get involved. They can get access to venture as an asset class. And that's extremely important.
Yes, sir.
I think my prediction is that more investors who add value will be in a position to raise a fund, and then that kind of completes the circle in some interesting way. At the end of the day, what I tell local investors is that you can be a blanket investor. You don't have the resources, you can't compete, with Tiger and A16Z and all these guys with
Yes, sir.
billions of dollars of capital. So your best bet oftentimes is to partner. Partner in the sense that you share deal flow, they maintain control over their investment committee, or you can inform their decision. You understand what I'm saying?
Yes, sir.
And things of that sort. So I try to be as helpful as I can. Generally, there's a bunch of things that we're experimenting with.
Okay.
And it's born out of an understanding of the asset class. So you have to understand how this works in other countries. In other countries, you have more diversity in the asset allocation mix.
Okay.
So in Nigeria, 68% of all assets under management goes to treasury bills. So we basically our biggest, and the concept is called crowding out.
Okay.
So our biggest expense in investment is funding the government, very profligate governments.
Yeah.
You understand what I'm saying? So,
Yes, sir.
So what happens is if we're able to introduce venture as an asset class that is
Mm.
not as risky as it currently seems, then I think more people will come in. So what does that look like? I think first of all, maybe you can imagine a VC model that's asset backed in some ways.
Yes, sir.
So maybe I buy a building that generates, yield, right?
Yes, sir.
And then I use those yields to invest in startups, right? Knowing fully well that even if I lose the money, you get what I'm trying to say.
Yes, sir. Yes, sir.
I would still have the equity value of the house to myself.
Yes.
When people say, this company is not a Nigerian company, I don't know. I don't believe it. I think for three reasons. One, a market are the people it serves, and if you have founders that are Nigerian, and you have a market that's Nigerian, you have people that are Nigerian. I don't know how you could make the case that the company is not Nigerian. I don't know if you get what I'm saying.
Yes, I understand.
Well, the big idea with Talent City is to eliminate one of the primary reasons why startups find it necessary to incorporate abroad and investors encourage it. And that is the fact that, just to put it very bluntly, when you think about the rule of law, when you think about the legal infrastructure available in Nigeria for multi-million dollar investment, it's extremely poor, right? It's
Yes,
not
sir.
global standards. So most people would default to the US, where there's an established case law going into hundreds of years, establishing all these things, right?
Yes, sir.
So we started doing some work on sites.
Okay.
We've appointed an architect, and there's landscaping going on. So
That's
we'll see how
great.
it goes. Yeah,
Awesome. Awesome. I hope that we'll be able to have time to talk about this again when it's completed.
sure. I'm sure we will
It
next
will be
time.
fun. It will be fun.